Paradoxically, interest on loans is strictly prohibited in Islam. But markup in credit sales is allowed. Therefore, lender is not allowed to charge over and above principal amount in a lending arrangement. But a seller can charge different prices in cash and credit sales, whereby the price can be comparatively high in the credit sales. This raises several questions. For example, isn't credit sale and lending similar in nature? When interest and charging extra amount on loan is strictly prohibited, why is charging additional amount on credit sale allowed? In this video we will try to explore answers to these questions. But before diving into the topic, hit the subscribe and like buttons to keep in touch and become part of the economopathy community. Shariah allows charging higher price in credit sales. There is almost a consensus among Islamic scholars that the credit price of a commodity can be more than its cash price, provided that price is determined at the time of sale. The Islamic Fiqh Academy of the OIC and Shariah boards of all Islamic banks approve the legality of this difference. However, once the sale is executed, any addition to the agreed price, particularly in case of delay in its payment, is strictly prohibited. This is because the commodity once sold belongs to the purchaser, and the seller has no right to reprice a commodity that he has sold, because this commodity no more belongs to him. This allowance stems from the chapter 2, verse 275 of Holy Quran, in which Allah Almighty forbids interest, but allows trade. Based on this verse of Holy Quran, Shariah scholars infer that Islam rejects time valuation in lending arrangements, but allows it in business and trade of goods. That is, sellers are allowed to charge more for deferred sale, but lenders are not allowed to charge additional amount over the money lent to the borrower. Shariah allows time valuation in deferred sale because seller is allowed to charge different prices in different conditions. For example, a seller can decide to charge lower price from poor customers compared to the wealthy buyers by giving them discount. On the same analogy, seller can charge higher price in credit sales compared to the cash and carry price. Higher price or markup in credit sales is justified because compared to the cash sale, seller has to bear additional costs and higher risks in case of deferred sales. These include the risk of default on credit, because the buyer may not pay the due amount. High capital requirements, arising from the need for injecting additional capital to support the credit sales. The opportunity cost, which refers to the cost of missing the opportunities to invest the amount tied up in credit sales. The risk of inflation, because the price of the commodity sold on credit may be higher on the future date, when the seller actually receives the payment. In addition to these, firms with fairly huge quantity of credit sales have to maintain a large credit department. Moreover, they have to incur following additional costs associated with credit sales. Cost of credit analysis, because the firm has to incur cost to analyze the credit worthiness of the credit applicants. Cost of servicing accounts receivable, including the cost of clerical work related to processing and record keeping. Credit collection expenditure, that is the cost incurred on the collection of accounts receivable. Bad debt losses, including the amount of money lost due to the inability of the firm to recover some accounts receivable. Bearing these additional costs and added risks, charging higher price in credit sales seems justified. Similar to credit sales, lending also has some inherent risks and costs. For example, just like credit sales, the lender also faces the risk of default, the risk of decrease in the value of money lent due to inflation, and opportunity cost. So a question arises, why lender is not allowed to charge interest or addition in any form, in a lending arrangement, to compensate for these risks and costs? Well, this is a tricky question, but the answer is quite simple. Islam rejects charging additional amount in lending arrangements, but allows it in business and trade, because Islam treats the lending and trade as two separate activities that are governed by totally different intentions. Islam views trade as a commercial activity that is intended to earn a living. Since trade is beneficial for human being and mandatory for the survival and smooth functioning of the society. Therefore, Islam has set forth different rules to promote a conducive environment for trade and earning halal living. Consistent with this view, Shariah allows charging higher price in deferred sale to compensate for the associated additional costs and inherent risks, to ensure the viability of credit sale, and saving business from undue losses. On the contrary, lending is considered a virtuous act in Islam, from which the lender cannot take any worldly benefit. This is because lending is not a commercial activity, rather it is intended to extend financial support to someone who is in financial distress. Thus, in a lending agreement, the lender is entitled to the principal amount only, and is not allowed to charge above the principal. Thus, the lender cannot charge a compensation for opportunity loss, or the loss in the value of money due to inflation, because these losses are borne by the lender, as a charity, with the intention to help the borrower. That is why loan is called Qardi Hasna in Islam, which mean a benevolent loan, because it is driven by ihsan, or favor with the needy, in the wake of pleasing Allah Almighty. Moreover, Allah Almighty has promised great rewards for those who give Qardi Hasna to those who are in need. Secondly, Islam does not allow making money out of money. This is because money is considered merely as a medium of exchange, having no intrinsic value at all. Therefore, producing money out of money is strictly prohibited. Hence, if money has to be exchanged for money, or is borrowed for exceptional reasons, the payment on both sides must be equal. In the nutshell, lending money and selling on credit are not similar in nature. Islam views lending as a benevolent act, therefore lender is not allowed to draw any worldly benefit from the loan. On the contrary, Islam views trade as a commercial activity, intended to earn profit. Since deferred sales involve additional risks and costs compared to the cash sales. Therefore, Islam allows higher price in credit sales to compensate for the associated additional risks and costs. Thank you for your time and attention. If you like this video, please like and share it, and subscribe to our channel.